All right, testing. All right, testing. Nice. Oops, I didn't edit the title. What's the date? 5th? Whew. So, I might sound a little stuffy on the stream. I think I've got the flu. So, none of y'all get too close to your screens. You hear? And I might mute myself a lot because I'm gonna be blowing my nose a lot. I need to get rid of these. This drive me insane. Oh wait, no. Bitstamp. Aha! I always keep at least one chart without alerts. Any trading view chads know how to hide alerts without removing them? Warning, please configure both primary and backup shortly. Is this working properly? Let me see. Is this working properly? Let me see. It looks like it. I don't know why YouTube's telling me it's not. Whatever. I'm assuming it's alright. Maybe maybe my VPN's on. It's not. Huh. Ah well, what are you gonna do? So, what was it, 306? I probably won't wait too long, maybe around 310. I'll get started on the top down. And then probably be done in about 30 to 45 minutes. But things are looking pretty good for the long term at least. Short term, intermediate term, I do think we're in for a pullback. It is possible that we'll just hold the 8 EMA on the monthly, but you know, I wouldn't say I'm super confident in that. I think we'll pull back towards maybe 21.5. But we'll see. I think it's okay to just be patient. You know, the last like month, it's just been kind of, you know, ape every 2% dip, 3% dip, 5% dip, just ape it. And now I feel like the tide's kind of shifting a little bit. I think we're going to have a little bit of a cool down. So I'm personally just trying to play it safe. So I'm not really doing anything extravagant today. Didn't enter any trades, cut most of my trades and profits. Pretty much just relaxing. Still got my long-term like spot coin, shitcoin bags. So, you know, I never really feel pressured to be super long or anything when I've got long-term bets like that. Oh, excuse me. But anyways, I guess I'm just gonna go ahead and get started because I really want to get this while I got some energy. So let's look at the monthly. Things are still looking pretty solid. Big thing, only big things that we're missing on the monthly is that I'd like to be trending above all of our EMAs, and I would like for momentum to be trending above 0. And you can see that the bulk of the bull market, well, it's kind of hard to say this because I was going to say for the bulk of the bull market, we're trending above all our EMAs, but Bitcoin literally trended above all monthly EMAs. I mean, since its existence. This is the first time we've ever had a trend below the bands, right? Like, you know, we've never seen that before. But regardless, with this trading model, you want to be trending above all your bands for a long-term uptrend. You know, you go look at stock market. I mean, it's pretty clear where you want to be long. Like, yeah, it'd be nice to be long in here on these dips and all this stuff, but really, it'd be nice to be long in here, right? In here. Being long here, great. We love that. It's good to, get in on these bounces. But we really just want to be long mainly for this stuff, right? And Bitcoin is kind of just in a, I wouldn't really call it no man's land, but it's just kind of in a little bit of a tricky spot, right? The monthly looks good, but not every time frame is like that, right? So all these EMAs are going to be represented as well on the weekly, where we can see a little better what I'm talking about. We've never broken the monthly bands on Bitcoin, but we have broken the weekly plenty of times. But let me just go ahead and finish off on the monthly. I have a bad habit of just zooming in too quickly, but anyways, key levels in the monthly, right? Of course, 20K, right? Pretty clear why that would be a key level. Old all-time high. Key level on this first dump, and we've now reclaimed that. And then 14K is really the only other level I have outlined beneath us, at least. And then, of course, the lows that we put in here and the lowest close from the bear market. I'd say those are really the most important key levels without using any kind of indicators. There's some indicators I like to use that can give us some other key levels, but really, these are all the key levels you need to focus on for the monthly. Okay. Cycle rising up. That's a good sign. Momentum rising. That's also a good sign. Although, like I said, I'd like to be trending above 0. Because you can have these little bounces like here. We had an uptick on the monthly. Let me show that in 2015. Right. Oh, well, this is kind of a good example. We did trend below a couple EMAs back here on the monthly, but we had a rising cycle. We closed just barely, but we closed above the 8 EMA, and we had an uptick in momentum. But then the very next month, it was right back to the previous monthly candle's low, right? Even though the cycle kept rising, even though we had an uptick in momentum, we then had a downtick, and the next uptick plus the next close above the 8 EMA, we also closed above the rest of our bands, and then from here on out, it was a very confident bull market, right? And now, I'm pretty confident the bottom is in. I wouldn't say we can't run these lows, but I don't expect something like, I'm not expecting something like this, right? I don't think we're gonna do something like this. Maybe, if things get really bad, maybe we can tag these lows, but I think the closing basis low is probably in. But that's just a good example that even when you have a lot of your things lining up, close above the 8 EMA, the cycle's up, momentum's rising, it's not the end all be all. We still got to pay attention to the weekly, the daily, and the 4-hour trends to make sure that we're positioned correctly. But I'm still not really in a rush. I mean, I know it's easy. Speaking for myself, of course, it's easy to get caught up in the FOMO. Everyone's making bank the last month, of course. Nobody is taking a losing trade, right? It's just win, 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 win. At least that's what Twitter has you believe. So, it's easy to get caught up in that, but really, the bull market begins when we're trending above 30K, right? I mean, how you want to define it, right? Did the bull market begin here when we bottomed? Did it begin at the higher low? Did it begin when we broke out, when we got up here? The bull market, right? The label kind of doesn't really matter that much. We'll just focus on the trends. But anyways, that's pretty much all the relevant info on the monthly. Ooh, a couple other key levels, right? The big market structure break that we just had with last month's close, talking about it like this, where we follow the monthly bearish candles, right? Simple strategy. Well, we took out 2 pretty key swing highs with this one monthly close. So I would say those are pretty good levels to bid on a dip. Okay, so if we go down there, we'll just pay attention to the 4-hour, the daily. To even get down there, we're going to have a trend like this, right, on the 4-hour daily, something like that. When that trend bottoms out, whether it's at 22.5, whether it's at 21.5, 18.5, or 16.5, that's where I think it's good to get a little bit aggressive. And then, my cat's going crazy. And then, especially if we get that pullback, we'll be back below the 8 EMA. If we do that, we dump for a bit, maybe into April, and then we pop back up above this 8 EMA. Cycle keeps rising. Let's say we have maybe a down month and we get another deep downtick, and then an uptick in momentum while the cycle keeps on coming up. And we do something like this, close back above the 8 EMA. These bands will come down a little bit probably. You know, as we get towards here, things are going to be looking really good. And I think that's going to be the time where we can start getting aggressive again. Okay, now that's definitely all I want to do on the monthly. I'm going to assume there's no questions. If there's any questions, throw them in the chat. If not, I'm just going to keep on trucking through this, assume we're on the same page here. So when we go to the weekly, we can see a little bit clearer what I'm talking about. You know, oh my gosh, it's such a like, what's the word I'm looking for? I don't know. I can't think of the word, but it's a phrase that's made fun of on Twitter, right? Not out of the woods yet, right? Well, it really does fit the bill, right? We're not out of the woods yet until we can get a strong trend above all these moving averages in here, okay? Just like in here, you know, this candle was great and all, but we were not out of the woods until we really cleared back above like 6,000. And then we got this great extension rally. And same back here. Look at this. We had this is when we closed above the monthly 8 back in 2015. This is that setup I was talking about where the monthly setup failed. We could still get something like this, right? That would be basically equivalent to failing in front of like 25, 26K. So that is still definitely a possibility. And then you can see we had a full weekly cycle back down. Momentum fully resets. And then the first sign that the higher low, well, I guess the first sign the higher low has been made is this big bottoming tail here, right? You know, you had a lot of people that were selling these basically all-time lows, or not all-time lows, but basically, you know, big lows. Obviously, this big wick is here too, but so many people trapped themselves here. And then we popped up the very same week, and then the cycle popped up. We got back above the weekly 8 EMA right here, and we got an uptick in momentum in here as well. So what is that? Around 250 was kind of your big like higher low sign. We had a close above the 8 EMA, nice big push, higher low here, reclaim, whatever, close back above this 200. And on the monthly, right, the monthly, this is kind of an early entry, right? Because the monthly entry is this close right here up at 315. That's when we got the monthly uptick again as well. So that would be how we would potentially get an early entry in current day. And I'm not saying we have to go all the way back to the lows or anything. Just because it happened in 2015, it doesn't necessarily mean it's going to happen again. But we definitely could, if we top out here, we could get a weekly cycle down into March and April. Momentum rolls or whatever, and then you get the uptick in momentum. Cycle comes up. Downtrend is over. You know, again, we're going to watch this 8 EMA, and then we start to break below it. That gets kind of bearish. It starts to roll over. Okay, we start to make higher lows, higher highs. Then we get back above the 8 EMA here. All your indicators line up again. That's where I'd be pretty happy to get aggressive again. I mean, it's been okay getting aggressive on these past few weeks, but you know, I think the better opportunity is going to be on a higher low. A lot of people are going to be expecting this trend to continue, and it certainly could. It definitely could. Even on the 4-hour, we haven't really broken market structure just yet. So I'm not trying to come off as a giga bear or anything. I'm just pointing out that there's still things that have to be done for this to be back in a fully complete long-term uptrend, right? We've done the bottom. Okay, we've stopped putting in lower lows. We've put in some pretty significant higher highs. Getting back above this high would definitely have me more confident, you know, if we were trending up here somewhere. But, you know, this is still a pretty good higher high. And now we need to see a higher low. Arguably, you know, this is the higher low. You stop making lower lows. Make a higher low. Make a higher high above here. Technically, that's a complete bottoming process. And we should be looking to be long on every dip. But at the same time, like I've been talking about, I think there's still a pretty decent chance that we come somewhere over in here I know it's a big box, and make a higher low there. The most bullish example would be, I don't want to zoom in too far ahead, but we could just hold a higher low on the 4-hour. And this is what I mean by market structure not being broken yet. So currently, these are our higher highs. Let's change this to green for the sake of it. Higher highs. Okay, well, the highest high right now came from this 22.5K low. So as long as we're not closing 4-hour candles below 22.5K, this uptrend is still intact. As soon as we do that, sure, there's a good chance we just run the lows, reclaim it, and then V-bottom. Bitcoin likes to do crap like that, and then you can just, whenever this little downtrend is broken, you can get active then. That's fine. But closing below here for sure is a potential trend invalidation for this uptrend, right? And we almost had it back during this consolidation, right? Here's our trend of higher highs. Okay. The last real higher low was pretty much this one. Arguably you could just say this one, but if we were to zoom in on the 1-hour, I think this is the one that you could go with. And we wicked into it. We didn't close below it. And then this little downtrend right here, right? This little downtrend was over here. And so this is a long candle and this is a long candle, right? This one right there. And so that's the same thing that you're looking for. You'll notice if we look on the 4-hour too, the cycle goes in your favor right about here, which is right about here. And then you get the uptick in momentum pretty much at the same spot. So you kind of get a trifecta setup right in here. You don't break market structure on a closing basis. Everything's still fine. Well, we could certainly do that here, right? Because, everyone during this period of time has been longing. Sure, there's people positioning on the short side. I'm not trying to debate that or anything. But the point is, people who are longing in here, there's a very good chance if they're not playing with a closing basis stop, that their stop is either right below here, or if they're conservative, right below here. So it's only natural for price to want to pull to those levels, right? It's only natural. If that's going to be painful for the people that have been long in here, I think it's likely to happen. But until we close below there, 4-hour market structure is intact. Okay, so that's the most bullish thing we could see. And that would essentially be if we're to hold in front of this last weekly candle right in here. The next bullish thing would be if we hold near the weekly 8 EMA as well as the daily bands. And then the least bullish thing would be to fail there. And then, like I said, we're coming back to this range that we're in down here. Whether we're going to retest the range high, the low of this big breakout candle, whether we're going to retest, this reclaim, or whether it's going to be the monthly candle low or this candle. It's kind of just a big guessing game. Like, which one is going to be the one? Who really knows, right? But those are basically the situations I'm looking at, right? A hold of the last weekly low in that 4-hour pivot, or a retest of the 8 EMA on the weekly and the daily bands. And if that doesn't hold, it's kind of a guessing game here. That's when you really just want to be patient and wait for that downtrend, that takes us down there to be over, right? So we'll go through what that looks like as we zoom in here. But, I just want to point out overall, things do look pretty good. Once we're trending above all of the EMAs here, and I don't just mean, I don't really just want the EMAs to look, right, like this, right? I want them to really start to expand and for us to mainly be trending above the 8 EMA on the weekly. Right now, the 8 EMA is still far below the 60, right? We really want to get this crossed above the 60 again, okay? And you can see pretty much every time that happens, when the 8 has been below the 60 for a while and you cross back up, things start to look good again. Even here, it wasn't below it for long, but when you get back above it after that big COVID dump, we're ready to go again. Same in the previous bear market, right? We trended below it for a while. That 8 EMA pops back above the 60. The bands start to expand. Everything looks good. And the other important thing is we want to be trending above this 200 period moving average and pi. So right now, we barely even broke pi. We really only broke it because of that FTX drama. I'm definitely of the opinion that if that FTX drama doesn't happen, that we don't even break pi, that we just kind of hold somewhere in here, consolidate, and we probably rally a lot earlier, since stocks actually rallied in like October and November and December. Meanwhile, Bitcoin, because of the FTX drama and all the contagion from that and uncertainty, we just sat still. We nuked in November, right? And then we sat still for a while. So I'm definitely of the opinion that if that hadn't happened, we wouldn't have even broken pi. So anyways, yeah, we definitely just want to be trending above basically 30K, right? To be really confident in a long-term bull market being back on. Okay, intermediate term bounce, great. No one's arguing if that's happening or not. Clearly it's happening. Long-term though, still got some work to do. Anyways, pretty much enough on the weekly. I mean, we could outline a bunch of different levels here on the upside, right? You know, this is a big level, or really just a big area of potential support resistance, right? Big level on the upside. This was our first big rally to a new high, right? And then the first pullback was to this $30,000 level, which we pulled back to again in the summer, and then we failed to hold in the summer of 2022. So naturally, that's going to be a big level. You know, I'm not trying to go out on a limb and say it's guaranteed resistance or anything, because a lot of people thought that in 2019, and honestly, you know, I was kind of that camp. I really expected, especially back then, I didn't really know as much as I do now. I wasn't quite as good of a trader investor, but I was, you know, I was pretty confident. Like, all right, well, we're gonna hit 6K, and we're gonna at least pull back to, you know, 5K, or we're gonna pull back to maybe 4,500 if we're lucky. But it just cut through it like it didn't even matter, even though we spent so long in front of it, right? You know, this big pivot here pushed us from 5K all the way to 20. And then we held it for basically an entire year. And then the first time we touch it on the way back up, we rip through it. That could very well be the same thing here. You know, a lot of people will be expecting, all right, 30K and then we're done. Well, what if it's 30K and then 40K? Like, you know, people are going to be asking, well, why would that happen? Well, why wouldn't it? You know, why would it not happen? Okay, oh, well, because we're in a recession, or the dollar looks ready to pump, or whatever, you know, all these different reasons why it shouldn't happen, but you know, it definitely could. So anyways, that's a big key level for sure. And then of course, right where we're chilling right now, where we're chilling right now, obviously a very key level. That's where we stopped when we first ran 30K, right around 25. That was resistance. After this first big dump, I guess this was like the 3 Arrows Capital, Luna stuff going on, right? We bounced, failed at 25, new lows, back at 25. You know, in theory, long-term downtrend could still continue and be valid, right? I guess it really depends on how, you know, loosely you're going to define a lower high, you know, because in my mind, you know, this lower high led to the last low. But, you know, you zoom out to the monthly, and that's not quite as clear. You know, you could say, well, it was really, you know, it was this lower high. Well, then you zoom out to the quarterly. Well, actually, it was really this lower. You know, at some point, like, well, zoom out to the yearly. It was really the top that led us to this low. So at some point, you can just keep, you know, defining what really defines the market structure. But for me, this was a big monthly break. But 25K is a big level, right? I think there's a pretty good chance that, you know, we could test back at 20K, but we'll just take what we get, right? If we hold 4 hour support here and we start to push back up, I think it's okay to be long, right? I think it's okay to continue to be adding on the dips. But, you know, as soon as we start to be closing below that on the 4 hour, I think you just want to be really cautious, right? Because things can get volatile again very quickly. All right, anyways, pretty much all I wanted to point out on the weekly. There's probably a couple more levels that we could talk about. You know, this was a big cluster over here. This is when we pushed from 10K all the way to 20, consolidated for a while. Everyone thought we were going much lower. I was almost certain we were going to go lower on that dip. We went from 20 to 16, and that was basically it. So, you know, that's kind of just a giant order zone or order block or whatever you want to call it, right? A giant area of demand, right? And we've kind of escaped from that now. So, and of course, you know, that'll extend all the way to, you know, the old all-time high. But, you know, that's, naturally, we would expect that to hold if we go back down there. So I think if we lose this, you know, there's just this big gap where we're kind of not sure where we're going to hold. Are we going to hold, you know, at the retest here? Are we going to hold in the band somewhere? Are we going to hold back at this 200? Are we going to go back to the 20K, you know, old all-time high? Who really knows, right? Kind of just a guessing game. But clearly there is a ton of demand down here. And the only reason I think we really even went that low is just because of that FTX crap. But anyways, looking at the daily here, I was talking on the last stream, or was it the video I put out this week? I'm not sure, but you know, we were looking like this. I was talking about you got to be careful if we wick above pi and then close back below it. And so the same thing about Ethereum. You got to be careful if we wick up to 1700 and close back below it. And that's exactly what we did. And I'm not saying you got to be shorting it. You know, I got a little Lido short open, but it's nothing big size. And I'm not like, you know, I'm not feeling like I got to be heavy on the short side, right? If you got cash, you know, you're already short, right? You're betting that crypto is going to go lower and that your cash will be more valuable at lower prices. That is pretty much being short. You're not leveraged short, but if you have cash, you're betting you're going to get some cheaper action. And, you know, I definitely have some cash. So that's good enough for me. It's nice to compound a little bit, you know, make some on the upside, make some on the downside so you can buy more on the dips, obviously. But it's not necessary, right? You don't have to always be trading both directions every time it moves. You know, you don't have to be short here and then long here, then short here and long here, short here, long here. That will definitely make you the most money, but you're also going to be having to flip-flop pretty perfectly. You know, most people are just not going to be able to do that. I am not of the camp that is going to be able to perfectly short here, perfectly catch the long here and there, right? Like, I'd rather just, you know, play the trend, and this trend is up, so I'd rather just try and compound on the long side, and then if it rolls over, you know, just be patient, and, you know, you can still play the short side. You know, I'll show some potential short setups when we zoom in on like the 4 hour and the 1 hour, but, you know, I'm still mainly focused on being a buyer as long as this daily trend is intact. If we start to get some daily candle closes below this region, then definitely want to be more cautious, right? Because then you're going to have I know we're on Ethereum, but the same thing applies to Bitcoin. Then you're going to have a pretty serious market structure break, right? Same goes for BTC, although BTC, like we talked about in the 4 hour, is really up here at like 22.5. Okay. So potential good setups, right? I think if we run these lows and we don't close below them, and then we're able to reclaim this 8 EMA and the 8 EMA starts to come back up, I think that's a good long. Okay, and then your risk is back below, you know, wherever we just hit, if we actually dump back to those levels. Or if we break those levels, right, and we get a little 4 hour downtrend going, right, when that downtrend is over, into our daily demand zone, into this previous demand area, right? And that's a good long as well. Something in there, you know, a little ascending triangle or whatever. I think that's a good long. And then the other side of that would be if we get a close back above, really back above 24K. If we can close back above pi, you know, if you can get a little, again, I always draw an ascending triangle when I'm thinking of breakout plays. They're not always going to be like that, but that's the idea, right? If you push up here and then you keep making higher lows in the lower time frame, you know, those are going to be pretty good longs too. But until then, I think we want to be really cautious around this 23.3K area, right? And really extend that all the way up to pi and the highest close of this area. Okay, I think we want to be a little bit cautious until we're back above that. Close above 24, great. You know, what are you missing out on there versus here? 5%? Not even? And I know, but on altcoins, it's 20%. Okay, well, in a bull market, altcoins go up 1,000%. You really care about 20% that much? You know, is it worth the risk? And if in your mind it's worth the risk, you know, start punting the longs, right? You know, it'll go back up eventually. But I know a lot of people like to trade on leverage. You can't just be punting longs wherever you want when you're trading on leverage because, you know, we got to deal with liquidations. All right, I'm going to check, make sure audio is still good and all that. Audio is still good and all that. Sound great, buddy. So, yeah, we'll talk about some potential short setups into this resistance here. If you're looking for a hedge, if you got a lot of spot bags and you just want to make some money on the downside to cover the potential losses of your spot bags, I think that's plenty reasonable, especially if we start to crack these 22.5K levels. I'm not saying you have to short, but, you know, if you buying some Ethereum on this dip, and then maybe you buy some MATIC or whatever, and then it bounces up a little bit, maybe you want to hedge short some Bitcoin perps instead of taking profits on your, you know, recent longs. I think that's a fine strategy. Blindly shorting right here, of course it could work out, you know, just like we have these candles that come out of nowhere on the way up. The same thing can happen on the way down. You can just go down, you can chop for weeks and weeks, and then in one day it's gone. But I just don't think blindly shorting here right near 4-hour support is a really good idea. But anyways, yeah, so those are potential long setups. If we come back to this demand zone here in the daily bands, I think that is a really prime area to make a higher low, right? And another thing we can do is throw up a Fibonacci from the peak to the low. And then another good zone is this 61.8 to 50% retrace zone. Okay, so let's say, you know, we come back, we get this new 4-hour downtrend or whatever, right? Whether you're short or not, right? You're watching that. Maybe you start to bid on spot because this is a good demand zone. If this uptrend is going to continue, this is a good level for it to happen at. There's very often across all financial markets, price will hold these EMAs. So I think it's okay to bid there. On the way down with this 4-hour downtrend, you got to be cautious, right? You don't just want to start bidding these lows crazy on leverage because even if you don't keep making new lows, you know, even if the low is in, there's a great chance of just running it a little bit, a bunch of times. You know, even, like, look at this. You know, how many people probably nailed this dip and then just really wanted to up the leverage on that first big candle and they got stopped. And because they lost money, they get cautious. They don't buy the next dip. And then they finally FOMO in right here, stop below the last low, boom, get cut on that. Cautious again, miss the whole run. Sounding familiar? Well, it happens to me all the time. So I'm speaking from experience here. It's okay to load up some spot on the way down or in leverage if you're playing it right. You know, you're controlling your size. If it's a really good setup and you're not just trying to convince yourself it's a good setup, it's okay. But I think the safer play if we crack these levels is to bid a little bit spot into the demand and then wait for this 4-hour downtrend to resolve. Because ideally we resolve in front of the bands and we get out of there. But we could certainly keep going lower into these fib levels as well as this previous zone right in here. You know, this was a big level. And then, you know, 20K, right? Old all-time high is right in here too. Like we pointed out earlier, this demand zone in here is pretty large. I mean, there's just a lot of potential places it could stop. So if we don't hold the bands, things get gross. So if we get a good setup, you know, that's different, right? If we come down into the bands, however we do it, right? And then you get a nice big bullish engulfing candle, I think that's an okay long. And if we close below it, that would be your stop out. Right? And I mean, that's pretty good. You know, that's pretty good risk reward. You know, stop out if you close below 19.5. And then first target would be back up here at pi. And then a more, oh my gosh, brain fart. What's the opposite of conservative here? I don't know. Optimistic, right? More optimistic would be, well, I mean, the next level is 25K. The real optimistic play is that we bounce to like 30K. Okay. In which case, this is a very, very good setup. If you're trading perps and you get a bounce, you're definitely going to want to watch out for a lower high because, you know, not just on the 4-hour, if we close below 22.5, we have a market structure shift on the daily, which means even if we're to have this great hold at the bands, we could just run to a lower high. Right? You know, this could be the start of a new downtrend, right? So, you know, it's nice to think that if we come back to the bands, you know, we get this money long setup and then it just pushes us to new highs. Great. That would be so ideal, you know. But the same time, it's, I don't know if I will say just as likely, but this is still a downtrend in that we're in the southern hemisphere of our moving averages, right? And I say this a lot, and the people watching this probably know what I'm talking about. The northern hemisphere of the chart is when you're trending above pi and the 200 on the daily, right? And you can visualize that as well on the weekly when you're trending above all of your EMAs, and on the monthly when you're trending above the monthly 8. Okay, and right now, of course, you know, it's not always picture perfect, this fractal trading model, because we're above the 8 on the monthly, but we're below the weekly bands, and we've still got room to test the weekly bands from a bearish perspective, but we're almost above pi on the daily, so that's, you know, it's kind of mucky, right? It's kind of mucky, and that's what happens when you break the bands of the monthly. Things can get kind of mucky. So, anyways, what we can do, depending on how you want to play it, you can either just, you know, if you bid this dip and you get a bounce, you just suck it up. Everyone who bids at 20K, obviously you want to be holding for much, much higher, but sometimes you got to suck it up. If you get a good bid at 21.5, you know, it goes down a little more, it goes up, it starts to bounce, probably worth taking some profits, right? Because for all we know, again, let's say we bottom here. A good way to watch for a lower high, just like we did from the low to the peak here. You go from the peak to the low, and you're watching this 50% to 61.8 retrace. And all the time I see this, guys, all the time, not actually all the time, but quite often, this bearish fib resistance will line up with previous support. So we know how this works, guys, right? Previous support often becomes resistance when tested from underneath. So we could certainly come back down here, retest that, and fail. Even if it's just, you know, ideally to a higher low, right? You know, you could fail, make another lower high, run that, you know, run these stops, whatever. There's so many different scenarios that could happen. So if we hold here, I think you hold that bag for new highs. But if we go lower, I think you got to be cautious if we come back up to this general 22.5K region, you know. And if you get a good setup on the 4 hour, the 1 hour, I mean, you can still have, you know, there's still some good longs just on that, you know, 2 to 3 hour. That's not bad, right? You can still make some good money. But we definitely have to be more cautious if we are not able to hold this level on the daily. Yeah. So, anyways, let's zoom into the meat of this now, which is the 4 hour chart. You can see we've broken the bands on a closing basis for the first time since last time we got below the bands was 16K. So, you know, and now I mentioned it earlier on the monthly, but now we're in no man's land, right? Are we going to hold this pivot? We're going to hold this pivot, or are we just going to come all the way back to the 200, which is around 21K? No man's land. Not a fun place to be trading. Okay, and then, you know, even if we hold here, right now we've got this little new downtrend. Did I do that? Did I knock my keys off? Yeah. Even if we hold here, just like we're talking about on the daily, we could come back up to that key level I was talking about, which is around 23.3. You know, we could come back in there. You can see all of our bands are starting to roll over in there. You know, again, we'll throw up the fibs, right? Let's say we go down and we run these lows at, you know, 22.5 or whatever it is. And then we come back up, 50% retrace. Another lower high in here. And then new lows, right? So, you know, buying here, even though this is a nice range support, you know, it's just not, it's not free money or anything, right? You know, this is kind of free money, right? You never break the bands, trending above the 8 EMA, little pullback, another close, boom, it's good to go. You're not having to retest the underside of this or anything. Everything holds just fine. Here, we've broken the bands. We've spent a lot of time consolidating and did not start a new uptrend. So we just got to be more cautious. Simple as that. So what I was talking about earlier, if you don't want to, if you still want to be a buyer, right? If you still want to be a buyer at these levels, I think you look to short, whether it's Bitcoin or Ethereum or, you know, one of the weaker alts, you know, any alt that has not had a good run, you know, I think it's a good short back up towards 23.3K. Okay. And if we're to zoom in on the 1 hour, you'll see our new 1 hour trend has flipped, right? Just like we're seeing on the 4 hour that we broke the bands, it's the same idea on the 1 hour, right? We're now in the southern hemisphere for the 1 hour. We're below pi, we're below the 200. We had these really nice holds of pi here. And so, you know, these are key horizontal levels, right? So like I mentioned on the 4 hour, we haven't broken horizontal market structure. But from an EMA standpoint, we are now in, you know, kind of negative territory. So could come in here on the 1 hour. If we come back here, right, the last lower high before this low was here. So same idea applies. Watching this 61.8 to 50% retrace level, and once again, lines up with a really key previous support. Also lines up with the bands in here on the 1 hour. I think this is a decent short, and then your risk would be either back above 23.4, back above 23.6, or if again you want to be more conservative, 23.7. Once we break this downtrend though, I don't think it makes much sense to be on the short side unless you're just like super long and you refuse to take profits on your longs. Then, you know, then it makes sense for something like that. But yeah, and it's not something you have to do, right? If you have cash and you're not giga long or you're just comfy in your positions, you don't mind holding through some drawdown, don't feel obligated to do this, right? You know, we've had a really strong uptrend. A lot of people have tried to get smart and short this and failed. You know, I had thankfully I avoided a lot of bad shorts in here, but I had one in here somewhere. You know, I tried to get cheeky on a breakdown somewhere in here and it just ripped right to new highs. I don't think we're gonna repeat this out of nowhere. It's possible, but it's the same idea, right? Don't try and get cheeky with it. Right? For now, you know, this is the range we're in. Okay? And treat it as such, right? So anyways, pretty much covered what I want to talk about on BTC. I don't think I'm going to really go over a lot of the alt plays I've been looking at. You know, we can go over some centralized exchange ones, but I think I'm going to avoid low caps today. I'll try to talk either tomorrow or Tuesday. I'll do a video and I'll try to go over some of the low cap stuff I've been looking at lately, but I just don't really feel it right now. I'm already getting exhausted just talking, even for like a half hour or whatever. But I feel like it's really important to cover Bitcoin, as you know, it's pretty much dictating the entire market. Obviously, there's always outliers. We know that. We get that. But anyways, so we'll look at a few of these here. You know, some of the ones I really care to get long. If we hold here or if we hold at daily support, you can see we got the 200 rising here in the 4 hour. If we hold down there, there's a bunch of stuff I am looking to get involved in. So I do want to go over those. But as far as the low cap side, you know, I'll list some names here. I really want to buy some Revest. I puked that for a little 2x at the bottom. And now it's getting close to where I sold. So if we get another dip, it's going to get back potentially below where I sold. And I definitely would like to accumulate there. Anywhere from 2 to 4 cents on Revest, I'm happy to be building a long-term position. Not something I'm looking to TP anytime soon, unless it gets at least a 2x or something. So Revest, MPG, Murder Penguins. I know it sounds kind of like Murder Penguins. Am I really going to buy something called Murder Penguins? Well, yes. I bought something in 2017 called Rye Blocks. What the hell is a Rye Block? I bought Dogecoin. We bought Shiba Inu coin. We bought Bork, Bonk, Bank, Bake, Cake. You know, we bought everything named under the sun. So I don't really care what it's named, honestly. But it's called Murder Penguins. MPG. Pretty cool idea for a project. They've got another like sister coin. I think it's Igloo. I'm not exactly sure how Igloo plays into it. I didn't really look into that much, but I did buy some Igloo because they you know, they kind of work together, and I'm not sure which one will go harder. Igloo's the lower market cap, so typically that goes harder, but the liquidity is a little bit weaker. So, you know, I did more on MPG. But anyways, it's made by the Amplify team. If you guys know Amplify, I'm a big fan. I've got a long-term position. Actually, it's my single longest term position in crypto. I have that bitch locked up. Pardon my language. I have it locked up until 2027. Is crypto even going to be around? Are we even going to be around in 2027? I don't know. But what will be around in 2027 is my locked Amplify bag. And there's a lot of cool stuff. That's another big project I'm a fan of. Amplify. It might even be my biggest bag right now next to my escrow GMX. But really cool project, Amplify. Anyways, not going to go super big into detail there. But I talked about it on my last stream. Get paid in Ethereum, get paid in Amplify. You know, it's pretty nice. And so MPG, Igloo is built by the same guys. Amplify got to $30 million in a bear market cap. So I could easily see Amplify going to 100 mil plus. I could see MPG and Igloo going to, you know, 15, 20 mil, something like that. And that would be, you know, right now I think MPG is like 600K market cap. So, you know, you're talking a 20x, 30, 40x maybe. So I think it's a cool project. Now keep in mind, guys, it's 600K market cap. It's tiny. I shouldn't even really be talking about it. You know, people on Twitter are talking about, oh, your paid group leaders shilling illiquid shit, so you pump his bags. Well, guess what? It pumped 100% the day after I talked about it. I'm not selling. I'm not selling. I mean, I'll dump on people if I want to dump, but I'm not mentioning it to get a pump to sell into. I'm mentioning it because I think it's going to go 10x, 20x from here, and I want the homies to get in if they agree with my thesis. You know, don't just ape stuff I'm aping. I'm not saying that, guys, and I'm not saying, you know, that I want to hide stuff or anything. But you know, sometimes for sure, especially when you start to get below $1 million or even $2 million market cap, you know, for me it's tricky, right? I want to get people in. I mean, I'm putting my money where my mouth is, right? I'm buying this stuff. But at the same time, I have what's the what am I looking for? You know, it's fair for me if I buy it one day to want to dump it the next, you know? But I don't ever want it to look like I'm trying to dump on the squad or anything, you know? But you know, $100 million market cap coin, I buy it, it goes down the next day, I decide I don't want it, I'm out. That should be okay for me to do on any coin. And I will do it if I want to, as you should too. You know, you get in at $1 million market cap, it goes to 900K, you don't want it anymore, get out, right? But for me, you know, I like to go hard, right? I might pump up something 10 or 20% to get in if it's cheap. And if I want out, I'm going to dump it 10 or 20%. You know, that's how it goes. And other whales do the same thing. You guys can do the same thing if you want. So anyways, that's my disclaimer on this stuff. The low market cap stuff, you have to be careful. It's extremely liquid. A couple $1,000 can move this stuff 5, 10%, right? So if you're getting in, expect to stay in. Like, you know, MPG, 500K market cap, I'm not dumping that. If it goes, it goes. I'll make money. If it doesn't go, it stays in the wallet, right? So anyways, always want to make sure you guys are on the same page with me on that, right? I'm not shilling low cap stuff to pump it. I don't think anyone really thinks that, but you know, Twitter people will be talking about that crap. I just think it's a good bet, and I like to be transparent about everything I'm doing. You know, sometimes I'll take leverage trades that I'm not going to talk about if I'm not confident in them. But, you know, most of my money in the bull markets has been made on specific low cap bets. You know, Woo Trade, $10 million when I bought it. Nobody's talking about it. Nobody knows about it. That's the kind of shit I like. At the same time, you know, I told you guys about Woo Trade at 2-3 cents when I'm trying to buy it. I'm aping it every day after I've mentioned it. You know, I kept buying it over and over and over. You know, I'm aping my own my own bags higher and higher every day. I mean, we can see it. You know, I think I talked about Woo Trade for the first time at 3.5 cents, and it was impossible to get in. Like, it was just stupid illiquid on Hobie. You could not buy a 10K, 20K position easily. So what did I do? I pushed it up. I bought it higher, and I bought it higher and higher over and over. I think I bought on this day. I bought on this day. You know, that's where the money's been at for me, is aping into low caps. I'm not making bank on these leverage trades. I mean, I have made some decent money on leverage, but the big plays come from the low caps for me, and I want you guys to be involved if you're interested in. Obviously, you have to be an adult. You have to understand the risk and that it's your responsibility, and the accountability is on you. If you decide to get in just because I'm saying it, that's on you. If you decide to get in because I talk about it, you look into the research, you accept the risk, whatever, that's also on you. The flip side is if it goes up 10x, I'm happy to get the thanks, for letting you guys know, but you put up the risk, pat yourself on the back. You deserve that win because you're putting up the money. Same thing on the downside. If that shit goes to zero, that's on you. You bought it, not me. Same for me. My bag goes to zero. I'm not going to go blame the Twitter post I read that informed me about it. I'm going to blame myself. And, anyways, I don't think I can recall a single time I've ever been blamed or attacked or anything. I just like to put it out there. I want you guys to, understand that that's extremely important, right? Because I'm happy to console, and, I've lost as much money as the next guy, but in the end, it's up to you, right? And so, anyways, look at me talking about not wanting to talk about it, but I'm going on a spiel about it anyways. But yeah, Revest, MPG, and Igloo, I've got bags in that. GMX, I've got a long-term escrowed position. Very much long-term bullish on on GMX. I think that goes to several $100s in this coming year. What else? I mean, a bunch of Arbitrum bags. I am not, and it's crazy. I was really well positioned for Arbitrum bags pumping in like the summer of last year and leading into the fall. And then I just puked him at different times for other stuff. And now we've had a big month of Arbitrum stuff. Typical, right? Alex pukes the bottom. But there's a ton of stuff over there I'm interested in if we get a better dip. Like, obviously GMX. Definitely interested in that. Plutus DAO. I have a small, like a moon bag still of Plutus. And I've got a staked bag of Sparax SPA on Plutus that's earning me Plutus rewards too. So I'm not like itching to get into that one, but I do like that one. I think it's at a good valuation, and they're doing a lot of cool stuff. They're going to own a ton of governance power across the Arbitrum ecosystem, and I think that's extremely useful as far as bribing goes and all that stuff. So I do like Plutus DAO a lot. The tokenomics I'm not super sold on, and I feel like the token only really exists for dumping, so I'm not sure completely if that's like my favorite or anything. But, I like that project. It's a good one. It's a low market cap. I think it's got good pumponomics. And then, obviously, Dopex, the rebate token for Dopex, Jones, all that stuff. That's kind of all moving together. I like all that stuff. I'd be happy to have any of those on a better dip. And then, what else is there outside of Arbitrum? Oh, another Arbitrum coin, Grail. Now, I'm sure we all remember Excalibur. That Excalibur is the dex that pretty much failed to be the native dex for Arbitrum. And Camelot, Grail, is the one that's doing really well right now. So if Grail has a good dip, I think that's one to be a buyer on, depending on if it's at a good, reasonable market valuation. Again, not going to really go into detail there, but I think it's at like 700 something now. So if you get to like the 4s, the 5s, I think that could be a good dip. I think the lows were around 200-ish or something. That pretty much is it for Arbitrum. I mean, there's other stuff like Hamachi and, there's countless Arbitrum bags, but those ones are the ones that come to the top of my mind when I think about it. Outside of that, like I said, the Amplify, MPG stuff. Let me go take a peek at my spreadsheet here. What else? That's honestly pretty much it. I got a lot of seed sales I'm interested in that I've invested in for the long term, but I'm not really trying to talk about those until they're live. Most of these are not live. It doesn't feel like it's even worth talking about them. Most people are going to forget about them. But there are a lot of very interesting projects that are going to be coming to market this year and into next year. Honestly, one of my favorite ones is Prime, which is Parallel NFTs token. So I don't know if any of you guys are in on NFTs and stuff. I'm sure some of you guys are, but Parallel is definitely one of the biggest, most well-known. and they have a token, Prime, that's going to be coming out this year. I got an opportunity to invest in the seed sale for that last year, I think, at some point, or maybe it was 2021. I can't remember. I don't know when I'll even be getting tokens for that. Maybe this year at some point. I'm not sure. But already on their beta platform, you can farm the NFT sets and the Prime keys and stuff like that. So I've got a couple Prime keys I picked up last year. So I've been farming those. Been farming I have one complete set of parallel cards again that I got pretty early on. I've been farming those. I think I've gotten about 15K Prime or something, and who knows what that'll be worth, maybe 15K, maybe 40K, maybe $100, I don't know. But I think it's going to be a really high valuation on Prime, which will bring a lot of attention to it, which means the initial listing will probably pump, and then it'll probably dump, right? And that dump, you definitely want to be keeping your eyes on it. Especially if when they do start handing out tokens to like seed sale people, I don't know what the vesting terms are. We might not even be getting that much off the original distribution or anything. So if the distributions are light, even more reason to be long on those on the dips or parallel. So that's one I really like. There's a few other that I'm super interested in that I've invested in. Again, I don't really feel like I'm going to talk about any of the other ones other than parallel until I start to see them come to fruition, because there's a lot of them I've invested in that I'm not confident in. There's a lot of seed sales I've put money in that I think are just a flop. So I don't want to talk about those if they're not even going to come to fruition. But other than that, in the Arbitrum bags and Amplify stuff and GMX, I don't really have any other stuff that I'm attached to right now. I think I'm going to really stick to, outside of those low cap bets, just stick to trading some L1s around like MATIC and AVAX, stuff like that. I think those will be have some pretty good swings. And then, I still want to get a fat Woo trade bag at some point. I had a position until I cut it today. I had a position that was, the fine position. It's just kind of light size. But I definitely, that's Bitcoin. Here we go. I definitely want to be involved in Woo trade when it flips back bull. It kind of reminds me of Ethereum's first dip. Right back here. Right? It kind of reminds me of that. So I definitely want to be long when the weekly for Woo USD starts to look like this again. When we're trending above the 8 EMA and when the 8 EMA is above the 60. Okay? Obviously, Alex, but then you're going to be buying at 40 cents. I don't really care. If it's going to go to $2, I don't really care that much, right? I just want to have good size and a good level of risk reward, and I want to have a real trend, right? For now, we do have a trend, right? Just like Bitcoin. This was a lower high break, okay? We stopped making lower lows, and technically this is a higher low. But ideally, I would like to be trending really, above 40 cents, right? And most importantly, I want this 8 EMA trending up there. So if it takes more time, maybe the 60 comes down and meets and I don't know, like 20 cents, say we roll over here, right? The 8 EMA comes down, whatever. And then we get back above it, I don't know, over here. I mean, that might be at like 20 cents. That might be the level to get long. But if it happens in the next month, it's going to mean 30 to 40 cents. And that's, again, it's perfectly fine for me. I don't like buying after a pump, but I do like buying a good trend. And right now we have a potentially good trend, but also a potential downtrend continuation scenario, right? So still a little bit cautious on this one. What? Oh, I keep forgetting. Huobi has these different closing times. So we've already got a weekly candle close for Huobi, but the volume here is so low, I would not pay attention to that. Definitely just pay attention to the spot chart on Woo. Man, I can't wait until they finally get Woo up here. Like, why is Crypto Calm up here? Why is BitGet and KuCoin? The volume for this stuff is dead there. All the volume for this is on Binance, which obviously should be at the top. Bitfinex almost certainly has no volume too, and Kraken. It's probably dead. It's on Binance, and it's on Woo. So I don't know why Woo, it's definitely got the most volume on Woo. I don't know why they don't throw that up there. I don't know if it's like a It's clearly not alphabetical, but I don't know what it is. Anyways, that's what you want to be paying attention to. That's going to have the most history. You don't have all of it like you get on the Huobi chart, so, you know, that's not quite as helpful, but Huobi closes are based off China time, so it's, you know, it can kind of give you a bit of a misread. But one could also argue, well, it's valid for the Chinese. All right, well, you know, power to you. In that case, this is a pretty damn good candle close, actually, right? We fully engulfed this bearish candle here, forming a BCI. So I would expect continuation from this level based off that. Based off this chart, I don't want the perps. I don't want the perps. Although I do want to point out the insane increase in volume on perps the last month. It has been nuts. There's clearly a lot of interest here. A lot of that was probably due to them burning like a quarter of the supply or whatever, but there's definitely a lot of interest here. But anyways, it's not out of the woods yet, you know, catchphrase or whatever. Definitely something I want to be positioned in for the long term, 100%. All right, we still looking good here. Yep, still looks fine. But yeah, that's pretty much all I had to talk about. You know, I can go peek really quickly at a couple coins like AVAX. I think AVAX is pretty good. Again, still trending in the southern hemisphere on the daily, right? Versus in the northern hemisphere. So, oh my gosh, I'm about to say it again. Not out of the woods yet. Not out of the woods means not necessarily out of the long-term downtrend. But once we're trending above $30, AVAX is going to start looking really hot. Until then, there's still some nice plays to be had. Say from the daily bands up to pi, right? You know, if we start to form a higher low in here somewhere, let's say $18, you know, right? Your risk is back down below the bands, below these clusters of lows here. Let's say like, say below 15. Just we'll keep it a little bit loose. And then your first target would be up here at pi, which is about 2.5R. Not too shabby, pretty solid trade. And then if you're cautious, like I said, if to get down there, we got to break 4-hour trend, which is going to look kind of gross. So if you're cautious and you get a good bid down here, maybe you short something else that looks weak on the way up in case we put in a lower high and start a new downtrend, right? I think that's a fine option. Or if you bid down here and you're looking for a lot higher at pi, you can still TP someone here. You know, this will be your first initial surge. It's worth a TP, you know, 25-30% of your size, something like that. I think that's a fine play. And then on the flip side, this is definitely not my favorite pick, but you know, we could be looking to short, since we're breaking trend here on the EMAs, we could look to short this bounce for that run down here if we're going to get that. But I think there's better coins than AVAX to be short on, like APT. I think would be a good one. This is a significant trend break here, albeit into daily support. But if we get a bounce back up here, I think that could be a good short. I think we'll make a lower high and potentially continue back down towards here. It'll really depend on what Bitcoin does, right? Obviously, if Bitcoin holds 22.5K, we're probably not going down here. But if it doesn't and it starts to look weak around 22.5, 22.2, I think this scenario could definitely play out. So APT is definitely one I'm looking at. Ape is another one. GMT. And then GMT's kind of already completed that move, though. Yeah, I mean, MATIC looks still pretty decent holding the 4-hour trend. Not that one. Ooh, maybe near. Maybe if you catch near up like near 250, near 250, that could be a really nice risk reward trade. You know, either something like this or more conservative, be stop above the high up here. And even then, that's a 2.5R trade. Pretty solid for a short hedge here. 5R, really solid. So yeah, that's a pretty good one. Optimism hasn't broken trend, so I don't know if I'd be shorting that. Solana, that's probably a pretty good one, right? If you can get a short back up near like 24.50, and then your risk is back above like 25ish. And all these short hedges are really a bet that Bitcoin will come back up to this region and fail, obviously. If Bitcoin reclaims this 23.3K level with some strength, you know, ideally taking out, you know, one of these clusters of lower highs here, it's invalid. And ideally, if you're shorting it, you're only shorting to hedge some longs, right? Or you're just, you know, if you're shorting here, you're playing the range trade, right? You're shorting here to cover back here. Okay. I think that's pretty much all I care to look at. Nothing in the chat. I'm gonna assume everyone's on the same page here. I mean, you guys are ridiculously smart, so obviously you don't have any questions. But if you do, I'm in the chat. I like to say 24/7, but I'm sick now, and unfortunately, my grandmother passed away a couple days ago, so I might not be the most active in the coming week or two, but I'm going to try and keep you guys updated as much as possible. And if you send me a message, there's almost a 100% chance I will get back to you within 24 hours, right? Like, I know for some of this stuff, you know, it's a little bit time sensitive, so I'll do my best. But I am dealing with a few things now, and I'm sick, so, you know, if I take a little bit to respond, bear with me, but I will try my best to get back to you as soon as possible if you have any questions, comments, or concerns. In the meantime, we got a lot of good stuff going on in Blockcircle. If you're not in there, we'd love to have you. I'm in the process of fully redoing our crypto trading course, which fully goes over my trading strategy and psychology and stuff like that. We're also in the process of launching our full data analytics platform, which everyone in Blockcircle will get access to, as far as I know. So I'm not sure when that'll come out. Probably not this month, maybe next month. I'm not exactly sure the timeline on that, but that is coming, and it's going to be badass, guys. Honestly, like, it's going to be extremely helpful. You guys are going to love it. So might as well join now. You can get ahead of that. And also looking to do a giveaway. I was planning to do one last year, and I just never really got the details of how I want to do it. If I wanted to do one giveaway or 10 small giveaways or something, but I have for a while wanted to do a giveaway for people in Blockcircle. But lucky for you guys that aren't in it, I haven't done it yet. But I'm definitely looking to do that. Whether, I don't know, it'll be $1,000 or 5,000 or something. I don't know. But definitely gonna be doing that, and obviously only people in Blockcircle are gonna be eligible for that. But anyways, guys, I appreciate you tuning into the stream. I hope you found it educational and useful and a good time. I will try to do a video, like I said, either tomorrow or Tuesday. If something happens tomorrow on Monday Open, I'll definitely try and do it tomorrow. And until then, and until next week's stream, I hope you all have a wonderful trading week. Stay safe, you know, call your loved ones, all that good stuff. Thank you, Jesus. I will catch you guys in the next one.